Hello, fellow traders. 'Tis I, the Rumpled One. It is Monday, December the 4th, the year 2017. Reasons for losing. I don't know how many emails from trading companies and gurus you get. I get a bunch. And it seemed like this weekend they were all talking about reasons for losing. I find it kind of interesting. In fact, one guy has something about the one thing you can do so stop all your trading losses. It'll put you on the right side of the trade 95% of the time. And sometimes I look at these, what they have to offer, because hey, I might just learn something. So I'm not opposed to hearing what somebody else say. I have an open mind. I don't know it all. There's always something I can learn from somebody else. Because the day I think that I can't, well, that's pretty much, it's over for me then. But a lot of time, I guess when I look at some of these things, it's like I should have known better. Because they're going to come out with some squiggly line indicator. I have to laugh because, and I'm laughing at myself. I'm not laughing at you guys, and I'm not laughing at anybody else. I'm laughing at myself because I once believed in it. Um, I really did. I didn't know any better. I didn't reason things out, but it took me a while, and then I figured out. It's like, you know what? This stuff's a bunch of garbage. I mean, it's just like those guys selling their EAs and their robots. I mean, they just do it on a regular, recurring basis. The robots are on sale, or get this EA, and somebody even wanted me to write an EA not too long ago, and I said, look, if you really think that an EA on a free trading platform stands a chance against the big boys with the high frequency trades and the response time that's faster than the blink of an eye, I kind of think you're kidding yourself. Really. On the other hand, if you have an EA where you say, if the euro hits 114, I want to short it, or something like that, so maybe it hits that price overnight, but you don't even need an EA. You could just stick in limit order in there. But then you say, well, if I put the EA in, then they can't see my order, and then maybe I can, extract a few pips, and wake up seeing a profit for the trade rather than just put the trade on and let it go unmanaged since then. That's a possibility too. But then again, you could put a limit order with your target or your take profit level and your stop loss too. So once again, I just don't think the EA is necessary. Not to mention, there's so many things that can go wrong with automated trading. It's not even funny. I think when I was starting, I think I listed 11 things. That was long before I was doing. That was even before YouTube was invented. So no, there's not a video on that, and I'd have to see if I have those notes somewhere in case somebody's going to ask me that question. So what are the 11 things? But off the top of my head, things like the power going out, your computer failing, the network going out, the broker's server going down. There's just a whole bunch. The computer freezing. So suffice it to say, there's a bunch. But let's move on. Let's look at what's happened here. Now, yesterday, remember, we had some big gaps. And looks like we still have some open gaps here. The euro, we still have an open gap, and it's heading in the opposite direction at the moment. But you can see here, it's still in that wick zone. It looks like today's candle's probably going to be an inside bar on the weekly. Actually, this is weekly. It's like, so scratch that. We'll look at the day. The day already we had a break of the low there. Nope, this is H1. How'd this get switched? Okay, but we did have a break here of yesterday's low. So once again, it broke through the wick zone. It looks like that trade could have taken 20, 21 pips out of it had you decided to go short, taking that wick zone breakout there at yesterday's low. Once again, simple trade, horizontal line, no squiggly line indicators were harmed in the making of this video. And as you can see here, the pound pairs had some huge ranges. Let's see what's going on there. Wow. So as you can see, once again, there was a break of the previous, we're looking at daily, a break of the previous day's low. It looks like that was good for about 30 pips if you nailed it. You can see here price got into the upper wick zone and then came out on the pound. And let's just look at the wick zone, and you can see it right there. Got in, came out, went through the bottom wick zone. And you can see here it came into the bottom wick zone, shot up through. So you see, once again, the opportunities of simple horizontal line trades. Let's go back here and let's put this back to the euro. Since we're looking at the euro this week, just to show the traders, especially new people, that it doesn't matter what pair you trade, it's how you trade it. And so euro buy zone. Oh, here's the daily weekly open, since it's still Monday, the first day of the week here. You can see had some small trades there. So pretty much that the buy zone only netted a few pips. So here, if you took that first trigger, unless you stopped out here, you could have exited right there for take a couple of pips off of it. You came down here. That was what, at least 5-10 pips maybe here. Once again, just trying to fill that gap. So if you had taken that breakout, a few pips there, once again to the short side, you could have exited with the profit. Sometimes the profits are big, sometimes they're not. You just have to take what you can when you can. And looking at the rat zone, you can see how price went low. Right now you can see here we've got a rat reversal put in a low. Remember, this indicator puts in the daily low, as opposed to, it's just the way I wrote it, because this is the way I wanted to look at it. I do think I have a version that puts in the dots as they are making low. So here, that would have been a low, the dots would have come down here, then I have a dot, another dot, would have stayed there, put another dot, and that would have traced it. So once again, you can see here, red price action, red candle closes, green candle closes, you've got a higher low, you've got a break of that high right there for a rat reversal trade. Or in this particular case, if you just wanted to do a turn trade, you see prices turning, take that long right there, you would have maybe taken a little heat, but now as you can see, you'd be up about 10 pips. Not too bad. And we're looking at the pivots. Oh yes, I remember. I'm going to have to put up the chart showing whether or not the euro likes to hit its daily pivot. You can see here the daily pivot's up there. Once again, we had that gap down. They were trying to reach it, not quite. And so you can see here we've got a monthly pivot that chances are the big boys are going to want to take price to that monthly pivot. And we've got the weeklies. So that's what we're looking for as a pivot trader. Once again, we've already gone over the wick zone. Simple price action trade here. Let's drop down to H1. And as you can see, simple price action. Green, red candle closes, you take the short there. You see red, green, you didn't get the trigger. So you would have not taken that trade. You see here it came and failed. So right there, could have taken that trigger short and collected profit and 10 or 15 pips going short. It's not difficult. It really isn't. So losses, reasons for losing, not sticking to a method. Jumping around a lot, missing the opportunities, not paying attention, not taking profit when it presents itself, second guessing, hesitation. There's a lot of reasons. But the thing is, there's only one main reason. Simply, the market didn't go your way. Because once you put the trade on, it's out of your hands. There's nothing you can do. There's nothing you can do. So you put the trade on, and basically you hope the market goes your way. If it does, it gives you an opportunity to exit with the profit. If it doesn't, then it's up to you to decide how much pain you want to take, for how long, and when you decide to cut your loss. It's just that simple. And see, most people believe that if they have the right combination of squiggly lines or the right magic numbers with the Fibonacci's, the golden mean, and it's in nature, blah, blah, blah. If it works for you, fine. One old trading buddy, Pepper, I don't know if she's still around, she could nail those fibs retraces literally to the penny. If she was off by a penny, I used to tell her to sharpen her pencil. I expect much higher out of her. But she could really do it. But once again, doesn't always work. Nothing really always works, except for a few things, such as price will go up and price will go down. So if you use a system based on that, a methodology, an entry system based on that, yeah, it's going to always work. Price is going to move away from the open. Price will reverse off the daily highs and lows. It happened right here. There was the daily low. Price reversed. There was a daily high. Price reversed. So there are things that do happen on a regular recurring basis, and hopefully you can use one or two of them to your profit, because that's all that this is about. So reasons for loss, reasons for losing, the market went against you. So fellow traders, as always, it's not what you trade, it's how you trade it. The Rumpled One signing off to go drain the banks.